All right, yo, what's up for you guys watching this on the YouTube replay? We're going to be looking at a lot of stocks live here, and we also have some news, a few quick news stories. Like, look at McDonald's right here. They're up 2.3% on the day. There was some really good news for McDonald's and their Minecraft Happy Meal deal. So they actually have seen a sharp, if you kind of read some of these articles right here, a sharp sales increase in April because of these McDonald's Minecraft meal deals. So McDonald's stock is pretty close to an all-time high, which is pretty cool. Another stock that's doing great is Sprouts Farmers Market. Sprouts Farmers Market, this is like a healthier grocery store. This stock is pretty close to an all-time high. Actually, a stock that did hit an all-time high today is Kroger, believe it or not. I actually obviously they're down from the peak, but this stock did hit a new all-time high today. Technically, we're up 9% on them. Nothing crazy. That's my Roth IRA right here. But yeah, here's my main taxable account on the day. We're up 1.8%. We were up at one point over 3%, which is crazy, but still we're down 11% year to date. Yo, what up, Vicky? Said Neo stock. All right, let's look at Neo right here after I show you my Moomoo account real quick. So check this out. This is my Moomoo portfolio as well. We're up 2.8% on the day. We're still down all time. We're down 60 bucks in here. But yeah, here's our portfolio in here. Again, none of this is financial advice. And let's check out this stock right here. So this is a company, to be honest with you, I would avoid. I kind of feel bad if you own this company because the stock is at an all-time low. Also, Tesla reports earnings today, so that might move the stock when Tesla reports earnings. But here's why I'd avoid this one personally. It's sad because they just lose so much money. They literally lost $1 billion just in the most recent quarter. So they lost 1 billion in the past 3 months, and the whole company's worth 8.4 billion. So they lost 15% of the company just in the most recent quarter, and they're diluting you. So I just be very careful with that one personally. And yo, what up? Key said Meta stock. Yeah, dude, I also own some Meta as well. I'm actually down. As of today, I'm down on my position 0.13%, nothing too big of a deal. But anyway, I think Meta's at a very great valuation. Again, not financial advice here. Let me do some quick analysis on them as well. So check this out. The thing with Meta is they just released a new app today. It's called Edits. If you go to the App Store, there's no reviews on it. It came out today. Meta released a new app today, which is pretty cool. They have 3.35 billion daily active users, which is pretty crazy. And the best part about Meta is the bottom line. They made 21 billion of net income just in the most recent quarter. Yo, what up, JM? Yo, Ale said QQQ. Actually, I would always buy a QQQM. It's actually the exact same ETF, same NASDAQ 100 strategy, but with a lower expense ratio. Same top holdings, just a lower expense ratio. They don't market it. Tesla reports earnings after the market closed. You should check it out. Yeah, so you know what? We'll check out Tesla real quick. So they report earnings today. Literally in 3 hours, Tesla's either going to be up or down a bunch, which will be very interesting. But check this out. This is why eh, this is kind of already priced in. Their total vehicles delivered is actually down 13% year over year. Tesla unfortunately lost their growth. If we look at their automotive business, it is down 5% year over year. So they lost the growth of the automotive business. But here's what no one talks about. Look at their energy and generation business. This is like one of the hidden gems on Tesla. It's doing great. It's up 112% year over year. And also, this is why I like Tesla a lot more than NIO. Tesla actually makes net income every quarter, but the multiple is a little high right now. 116 times net income, and they lost the automotive growth. So I guess we'll see. They also have a company update today, so that'll be very interesting to see. I got a spy call. Hey, yo, that's what's up. Yeah, S&P 500 call it. That's what's up. So what is ABAT? American Battery Technology. This one looks really risky. They're only worth $100 million. So the whole market cap is $100 million on this company. And yeah, dang. But I would really stay away from this one. They have no sales, 300,000 of sales, and they lose 10% of the company a quarter or more. They've lost, yeah, please stay away from that one. That looks very risky from a fundamentals point of view. So let's see. Do you do Coca-Cola is 80 or do you think Coca-Cola will be $80 by the end of the year? Yo, that's a classic Warren Buffett stock. Let's check out Coca-Cola right here. So yeah, they're at $73. Look at that. Coca-Cola is at an all-time high today. So congrats if you own them. This is a great dividend play. If you buy them, you get a 2.7% dividend yield. Even right now, if you buy them, and they just print net income. Look at that. They just make like 2 to 3 billion of net income a quarter. So yeah, well, I'm sure Warren Buffett approves my message there. He's the largest shareholder of Coca-Cola, actually. So, why is the stock market going up? I don't know. I think there was some White House executive that says the China tariffs are unsustainable and good news or something. I don't know. Take a look at MSTY. Yeah, this is a super high yielding covered call ETF right here. So if you look at MSTY, this is why I don't really like these covered call ETFs. Like it's down, 26% the past year. So, yeah, you get the nice dividend, but I don't know. They just sell calls on Bitcoin, which isn't a terrible asset to sell calls on because you get the nice premiums. But you won't outperform the market with that kind of ETF. You only buy it to maximize your dividend income. And here's us on the day. We're down from the peak. We're still up 1.75%. I just like being completely transparent. I'll show you every stock that I own. Here's my total percent change. I go to all the other TikTok lives and no one like shows their portfolio. I'm reading both the YouTube and the TikTok chat. So what's up? Yeah, if y'all want to support me, I'm streaming on YouTube as well. So let's see. Sensei said Nvidia stock. Let's check it out. So Nvidia, yeah, they're $98. So Nvidia is under $100 a share. They're trading at 24 times forward PE, which is very fair. The PC GPU market share is an 18%. Nvidia has a really huge market share. Their automotive revenue keeps on growing. Here's why Nvidia deserves all the hype. It's because of this net income right here. The net income was 22 billion just in the most recent quarter. I mean, that's incredible. If we zoom out, it's sometimes under a billion. So they've really increased their bottom line, and these are real profits. It's super impressive. Net margins are 56%. So yeah, I think the risk to reward looks pretty decent on that one. Oh yeah, and someone said APLD. If we go to Nvidia's portfolio right here, Nvidia is so big they literally own some like individual stocks. Like they own part of ARM, and one of the stocks someone just asked is APLD. Yeah, this company is owned by Nvidia, and this there's some good news and there's some bad news about this company right here. Here's the good news. Check out their cloud service business. This is like really impressive. It's up 200% year over year. It's basically nothing last year. So it's really impressive, that growth. But if we go to the net income right here, they're still burning a lot of net income. Why is the screen so zoomed in on TikTok? Hey, does it look weird? Hold on, let me check it out real quick. No way. Hold on. Wait. I think it looks fine. All right, I don't know. Maybe I'm crazy. All right. Hey Oscar, appreciate you, man. Thanks for the follow. Um, yeah, anyway, let's keep going here. So yeah, that's what's cool about Nvidia. What is this one? So V-Man said IDXX. What's this stock right here? So IDEX Laboratories. Wow, they're a huge company, a $33 billion company. The stock hasn't done great the past year, but let's check out the fundamentals here. So they do companion animal group. Well, look at the sales growth. I mean, let's see. It's up 6% year over year. Mid single digits. That's pretty all right. What about the bottom line though? So yeah, they're just making 2 to 300 million of net income a quarter. They don't pay a dividend. They're probably doing some stock buybacks. But yeah, honestly, I like that they're making net income every quarter. The growth is slowing. Like the sales are only up 6% year over year, but they're very profitable. They might even pay a dividend one day. Um, I could see the edges of your screen, like the battery and time. Yeah, dude. What's up? Let's see. SoFi Technologies, yo. Oh yeah, here's my Sprouts Farmers Market position. That's another one that we're up like crazy on. Again, these risky companies, you don't want to have a lot of your portfolio in like a SoFi just because they're so risky. But I'll give you a quick analysis on SoFi. I do own them, so I might be biased. I don't own much of them. But here's why I really love them, and people are really starting to take SoFi serious. Look at their financial services business. I mean, this is super impressive. It is up 85% year over year, literally to a new record. And same with their bottom line here. If we zoom out to last year, they used to lose like 100 million a quarter. No one could take SoFi serious. Well, now SoFi is making net income every quarter, so that's what I like about them. But they do trade at a kind of high valuation, but they deserve it because they're a high growth company. Why is the stock market going up then dip? Yeah, dude, I don't even know. There's just so much volatility in the market lately. Like we're still down 10% year to date, but yeah, look at that. We were we were up almost at like 3%. Uh, Anyway, let's see here. SoFi and what is LPB? I can't find that stock. What's up, Alex? Oh, ABBV. What up? Let's check out AbbVie right here. Yeah, this is a great pharmaceutical stock in my opinion. They're also a dividend growth company. So check this out. You get a 3.6% dividend yield, which is very impressive. And they sell all these different prescriptions. Have you heard of Skyrizi before? Look at the growth of just this one prescription. I mean, in 2019, the sales were 300 million. Now it's 11 billion. I mean, that's something. Whoa, it's up 57% year over year. Wow, that's actually really impressive. So yeah, what about Rinvoq? Like, look at these prescriptions that they own. So anyway, this is like a pharmaceutical healthcare company. They did lose net income in the most recent quarter. I think they had some kind of one time adjustment. But Yeah, that's why the payout ratio looks so high. Ooh, here we go. What up? Mardonis said Palantir. Yo, this is a great debt-free company in my opinion. So the government loves this company right here. A lot of police stations use Palantir. Like, look at this. 55% of the company's revenue comes from the government. Oh, hey, this is a brokerage right here. If you want to get it, it's in the link tree in my bio. First link there. It's called Mumu. Uh, so anyway, look at this. The government revenue is up 41% year over year, literally to a new record. So incredible government revenue growth and commercial revenue. It's up 31% year over year to a new record as well. So incredible growth there, and they're debt free. I actually have a watch list. Hey, maybe you could find a stock or two you could add to your watch list. Again, none of this is financial advice. Hopefully, you can find a cool stock here. But here's my debt free watch list. Every single stock in here has no debt, like DocuSign, Duolingo, Pinterest. Has anyone heard of the Opera GX browser? Did you know they're a stock? They're worth 1.2 billion. Pinterest is debt free. Zoom, Reddit. I own some Reddit, Yelp, and Celsius. So anyway, ooh, SoundHound AI. So, yeah, the PE ratio. The PE is just a net income multiple. So plus the stock buybacks or dilution. So it's basically just how many times year of net income you're paying. So anyway, here's SoundHound AI. There's some good news and bad news about this company. Here's the really good news about SoundHound AI. Look at this subscription revenue growth. I love subscription model companies. Last year they had no people, like 400,000 of revenue. Now it's 30 million at this incredible growth rate. What's it going to be this time next year? That's what I'm really intrigued about SoundHound AI about. But I still got to be careful because they're burning a lot of money right now. They just lost 250 million. But the assets are still growing. Their liabilities are growing as well because of that $250 million loss. So it's like a mixed bag there. I do like the Tesla down, or yeah, dude, we get Tesla earnings today. That will be what everyone's watching. So we get Tesla earnings in 2 3 hours. So yeah, here's Tesla right now. They're up 3.3% on the day, and a lot of people are going to wait for the earnings call. So yeah, I'll probably be live when Tesla reports earnings. If y'all want to hit the follow button, we go live every day, twice a day. I don't sell anything. I don't have a book, course, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'm literally just on here giving my opinion. The only thing I do have is a YouTube channel. So if you want to support me, go subscribe to my YouTube channel. It's called Nathan Robert, link tree in bio. Ooh, what's up? Diego said Apple. Yeah, this is the largest company in the world. And here's why I think honestly everyone should probably own a little bit of Apple. It's the largest holding in the S&P 500. So again, none of this is financial advice, but here's my analysis on Apple for you. They have a huge smartphone market share, 23% market share, 55% of their business comes from the iPhone, then the services, the wearables like the AirPods, the Mac. But like the services business, whenever you buy something in the App Store, Apple takes a huge 30% fee on that transaction. And it's high margin for them. It's crazy. And here's why Apple's so affected by tariffs. Did you know only 36% of Apple's business comes from the US? Then they're in EU, China, all these other countries. So yeah, that's what's cool about they print money, dude. 36 billion just in the most recent quarter. So yeah, what time is it? Hey, you can see the time in the top left. It's 1:51 for me. What's up? Yeah, the market closes in 2 hours. So let's see. Check GameStop. Yo, there's one thing I like about GameStop. Out of all the meme stocks, this is one that has okay fundamentals. You're not buying them for the business because look at like the actual GameStop stores. You're not buying them for that. It's the business model's not good. It's down 28% year over year. But here's why I really like them. It's so impressive. This company has no debt whatsoever and 4.7 billion of cash. Honestly, I'm gonna add them to the debt-free watch list. So GameStop literally has no debt whatsoever, 5 billion of cash, and the whole company's worth $12 billion. So if you buy the stock, 40% of what you're paying is just their cash on hand. So that's interesting. But again, I don't own them. I'd probably avoid them. Oh, yo, Nathan said Raytheon. Yeah, if we look at RTX today, this is an aerospace and defense company. They're down 10% on the day, and they're starting to look at a pretty attractive valuation. Hey, what up, John? Up, and away. What's up, dude? So here's RTX. They have a 2.2% dividend yield, and here's all the businesses that they own. You've probably maybe heard of Raytheon, Pratt Whitney, Collins Aerospace, but they're down 10% on the day. I haven't looked at their earnings yet. Maybe they gave bad guidance, but I do like them. Oh, yo, KB said Netflix, dude. This company is so impressive. I don't believe it. Nearly an all-time high today. people been saying Netflix is kind of tariff proof. You know, how you going to tariff Netflix? I don't really know, but look at this right here. Their premium subscribers went from 282 to 301 million. So they now have over 301 million premium subscribers, and they just print money, man. They literally made 3 billion in the most recent quarter of net income. They're making billions every quarter. The free cash flow is just as impressive, you know. They barely paid the Squid Games people, and Netflix made bazillions off it. So anyway, um, oh yo, what up, the Wall Street? Yeah, let's check out SoFi stock, dude. I own some of this stock as well. Oh yeah, here. I think I was just looking at that. Yeah, I do own 24 shares. I don't own much of SoFi, but I do really like them for the growth. You know, they're a fintech, they do lending, but look at their financial services business. It's literally at a new record. What? Oh, hey, if you want to get this app, it's in the link tree in my bio. It's the first link there. It's actually a brokerage. But anyway, the revenue is at a new all-time high. It's up 85% year over year. So impressive. And also, SoFi is making net income every quarter. You know, if we zoom out to last year, this company used to burn so much net income every quarter, but people are really starting to take SoFi serious. Uh, Yeah, hey, this brokerage is called Mumu. Link tree in bio, first link if you want to get it. Let's see here. Oh, Fang stock, yo, that kind of like the Batman right here. So yeah, that's kind of like the Mag 7. Wait, or maybe you're talking about the mining company. Hold on. Diamondback Energy. Yeah, so here's Diamondback Energy. This is an oil and gas company. Uh so look at this right here. They have a 6.1% dividend yield. That's what's so cool about these oil stocks. They have a sustainable high yield. But again, these oil stocks, you won't really outperform the market in the long run. Like this stock hasn't moved too much, but you get the nice 6% qualified dividend. And, you know, if inflation comes back, war fears, oil kind of does good, but they're printing net income as well. Wow, their assets are growing. So, yeah, it looks like they have a sustainable 6% dividend. That's really impressive. Um, let's see. Bank of America, yo, that's a Buffett stock. Yeah, let's check out Bank of America right here. This is another one that has a really high dividend yield. Yeah, this is 10% of Warren Buffett's portfolio. So check this out right here. This one has a 2.7% dividend yield, and the payout ratio is only a 31%. So they have so much room to raise that 2% dividend. They're in consumer banking, global wealth management, all that. But best part is they literally make like 7 billion of net income a quarter. So we know that that dividend's safe, and Warren Buffett owns it for a reason. What's a good amount to hey, I when I first started investing, I just deposited like like 20 bucks into Robinhood. Yeah, I have multiple apps right here. Here, I'll show you this right here. Here's my main taxable account. You know, we're up 1.6% on the day. This is my dividend only portfolio. So every stock in here pays a dividend. Oh, yeah, here's a new stock I bought. I haven't really announced this on here. I bought United Health Group. I haven't, hey, I wonder if Jello's here. I bought UNH stock. I think the risk to reward looks pretty good on this one. My literal most recent YouTube video is a full analysis on UNH. So if you want to see my opinion on UNH, go watch my most recent YouTube video. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Oh, someone said CEG. Yeah, I really love CEG right here, Constellation Energy. This is the largest nuclear energy stock. This company owns 55% of all the USA nuclear energy reactors. And I'm down 3% on my position, but they're a great company in my opinion. Oh, I also bought a little bit more of Google. I'll just show you some of my, again, don't, this isn't financial advice. Don't like follow me, but I bought another share of Amazon yesterday as well. I just think the risk to reward looks so good on these. I can get behind paying these valuations. Again, don't listen to me. You could lose a lot of money in stocks. Look at this one right here. We're at an all. This stocks are like an all-time low. We're down 1,000 on that one. What up, Catherine? How's it going? Xpeng is flying cars. Hey, I don't know. Oh, yo, we actually, if you want me to look at Xpeng, I got you. Someone said Costco. Yeah, so this is I love Costco's business model. You know, you got to have a subscription to get into the business, and they just make so much net income, like one to like 2 billion of net income a quarter, and customers feel like they're getting good deals. You're buying stuff in bulk at Costco. It should do good in a recession, you know. So I really like Costco, and some people will like not go to Costco but still pay for their subscription. That's kind of like Amazon. Here's the funny thing: people maybe will stop spending so much on Amazon products, but they'll still keep their Amazon Prime subscription, which is all high margin for Amazon. That's pretty cool. And that's just one part of Amazon's business. You know, Amazon also has their AWS. Like, this is the most valuable part of Amazon, by the way. It brings the most of their bottom line. Their Amazon Web Services. It's incredible. It's up double digits. And if we go to the net income on Amazon, they made 20 billion in the most recent quarter. It's nuts. I mean, I love how profitable Amazon is now. Anyway, so let's look at some more stocks here. What is this one? GNLX. Let's check it out. So GLNX. So yeah, this one has a really small market cap. I'd be careful. They're only worth $100 million. And dang, I feel bad if you own this one. The stock is at like an all-time low right now. A clinical stage biopharmaceutical. So yeah, look at this. This is why I would really stay away from this one. They're a revenue-less company. They're a startup. They've never sold anything or $8,000 in the most recent quarter. And they lose 9 million a quarter. They lost 9% of the business in the most recent quarter. So anyway, I'd really stay away from that one. Unless they can like dramatically increase their sales. I mean, but let's see. Oh, Palantir as well. You think Nvidia might recover? I think. Oh yeah, should we look at Nvidia? I'll look at Nvidia after that. Let's look at Palantir real quick. This is a debt-free company, by the way. What app? Oh hey, if you want to get this app, go to the link tree in my bio. First link there. It's actually a brokerage. But look at this right here. The government business is the most is the best part of Palantir. Nearly every police station uses Palantir's software. It's up 40% year over year. The growth is the real winner here. It's just incredible growth, and they have a monster balance sheet. I mean, their assets keep on growing. They literally have 5.3 billion of cash. So yeah, Palantir is doing great. Yo, Kadu, what's up, man? Good to see you. Yo, I actually just loaded up uh on UNH United Health Group. Bought 4 shares of them. But yeah, good afternoon. Yeah, we get Tesla earnings in exactly 2 hours, so that'll be fun to. We'll probably stream it live. See, I was looking at Nvidia as well, so I think the risk to reward looks pretty good on Nvidia. I also bought Google yesterday and Amazon. But here's Nvidia right here. They're trading at 23 times forward PE. They have a huge GPU market share, 18% PC GPU market share. That's what's so impressive with Nvidia. They partner with GM, WeRide. Their automotive business is at an all-time high as well. People don't really talk about that, the data center business, but here's the most impressive part. They made 22 billion of net income just in the most recent quarter, an incredible amount. Uh, and it just keeps on growing. So until that growth rate of their net income slows, I think Nvidia is a great hold, or even not financial advice, even to buy them. Let's see here. Oh, check out SKK Holdings. What's this one? Let's see. Oh yeah, we get Google earnings soon. Oh, please don't buy this one. This whole company is worth $11 million. Yeah, I just can't trust my hard-earned money in these kind of companies. They're only worth 11 million. That they have so much liabilities. They're really leveraged. They're losing money now. So yeah, nothing's really blowing me away there to really want to buy them. That could maybe be a swing trade or something. But yeah, I'd be careful with that one. Let's see here. RTX dots. Yeah, that's Raytheon. This is the aerospace and defense company that fell today. They reported earnings. Um, I don't projects an $850 million profit hit from Trump tariffs. Whoa, that's actually crazy. So 850 million less of net income. Yeah, look at that. They make a lot of net income every quarter, usually like 1 to 2 billion. So that really sucks for them. That's gonna hurt their bottom line. That might be why they're falling. What's your most profitable stock? I'm not sure what you mean by that. Like, all my companies are profitable, but maybe you mean which one I'm up the most on. That would maybe be Powell Industries right here. Um, this is a debt-free company as well. I do like them. Let me know what you mean. I just like being completely transparent. By the way, we're down bad in this portfolio. Check this out, for example. Like year to date, we're down 11%. Yeah, here's my total percent change on every stock, and you're like we're down on most of my holdings. And you're like Meta, UNH, Google, dude. Google, I bought some more of them yesterday. Google's down 20% year to date. I don't believe it. Um, Yo, what up? Yo, Sky Dizzle, how much do you invest a month? I try to at least put $500 a month into the market. Um, at least. Sometimes I'll rarely not invest, but I never withdraw. So anyway, check Rain Metal. Is that a stock? What ticker symbol is that one? AUR, please. What is AUR? So Aurora Innovations. So a $10 billion company. So really nice market cap there. So what do they do? So wait, do they not have any sales right now? Yeah, they don't have any sales right now. So I'd be careful with that. They don't sell anything and they're losing a lot of net income right now. They have no debt, which is a great sign. Looks like lots of cash, but yeah, they have no sales right now. So that's what's keeping me away from buying that stock. They've never sold anything. Honestly, in a year's time, we're gonna be glad about this recession. Yeah, it created a great buy the dip opportunity. Can you check Ethereum? Yeah, we don't really look at crypto, but there's all I can really look at is the stock price. There's not much. Like this is what's cool about crypto. There's no earnings reports. There's no net margins they can miss on. That's like a unique feature about crypto. They can't miss on earnings. Like Tesla might miss on quarterly deliveries. So that's kind of a cool feature about Bitcoin and Ethereum. But yeah, unfortunately, Ethereum has not done too good the past couple weeks here. I'm not too sure what happened there. I think it's just everything. Just bought into Amazon as S Smart. Yo, not financial advice, slow. I also own a lot of Amazon. I do like that one as well. Let me see. Oop, there we go. All right, so I have 8,100 invested so far at 21. Yo, that dude, Sky, that's awesome, man. That's really cool. He's 21 and has 8,100 invested. That's great, man. So yeah. Hold on, the thing just unplugged from my phone, so my thing is frozen right now. I think I can fix this though. Just gotta reconnect. Thank you, Apple TV. All right. Well, hopefully we're back here. Sorry. Um, you know what? Let's see. Yeah, we could look at Amazon as well. We bought a share of them yesterday. I think the risk to reward just looks pretty good on Amazon. If we look at the best part on Amazon, it's just the net income right here. They made 20 billion of net income in the most recent quarter. I mean, that's just so impressive. So, yeah, and they have so many businesses inside one. Like they own the AWS, they have Zoox. Like Amazon just has so many businesses, which is so cool. Let's see. ELEV. Yeah, IDK Productions. I would not trust SKK. That was so risky. So here's ELEV. This is another super risky company. I just couldn't buy this stock. This whole company is worth $20 million. Is this another revenue-less company? Yeah. So this is a company that doesn't sell anything. They've never sold a product or a service. So I just try and this is just not the kind of company I want to own. They've never sold a product. Look, the whole company's worth 20 million, and they lost 10 million in the most recent quarter. You know what? I'm going to add this one to my watch list to potentially short this one. The stock should be at zero, but don't know how they're holding on for life. So if there's a little rally on that stock, I might short it actually. Let's see. QCOM. Ooh, I love Qualcomm. Dude, this is a great company. I mean, great dividend growth company, and they're at a very fair valuation right now. Check this out. The PE is a 14. Like, that's a really cheap valuation, 14 times net income, and you get a 2.5% dividend yield. The payout ratio is only at 36%, so that's a very fair dividend payout ratio. And check this out. It's so impressive. They just literally make 2 to 3 billion of net income every single quarter. So yeah, they just make a lot of net income. They can easily afford the dividend, and they could afford to raise the dividend. What was the last one? I think I was talking about Amazon was the last stock I was talking about, or the stock I added to my watch list to short was ELEV. It was this one right here. This is the company I would please stay away from. Don't buy that stock. I don't know how they're still existing. So let's see. Oh, someone said Marathon, Mara. So that's a Bitcoin proxy. So if we go to the Bitcoin stocks right here, yeah, Marathon right here. This is a Bitcoin mining company. So unfortunately, this stock has not kept up with the actual stock price of Bitcoin. But you mainly just buy this one for the Bitcoin and the assets they own. Like eh, their assets are going up because the stock price of Bitcoin has gone up so much. But yeah, I would rather just own Bitcoin to be honest with you, or even like a MSTR. Ticker LIN. What is this one right here? So let's check it out. What's up, R5? So LIN stock. They're a huge company. Wow, this whole company's worth $200 billion, and the stock's done great. It's pretty close to an all-time high. You get a 1.3% dividend yield, which is really nice. So what about the net income? So wow, look at that. They're literally making 1 to 2 billion of net income every quarter. It grew 12% year over year. The sales were flat, but the net income grew. So that means they're expanding their net margin, which is really impressive. So yeah, I can see why that one's done so good. Oh yeah, ELEV. So let's see. BMY, yo, that's Bristol Myers Squibb. So this isn't like a health insurance company, I believe. So they had they missed on earnings one quarter by a huge margin. So or no, they sell a bunch of prescriptions, I think. Let's see. So Eliquis, let's see how that's doing. It's up double digits. Obdivo's up 3. That one's down. Anyway, they just sell a bunch of different, I guess, prescriptions here. But they had a huge lawsuit where I think, like, I don't know what happened, but they lost $12 billion in one quarter because of it, and the whole company's worth 100 billion. So they lost 12% of the market cap from that, which wasn't great. Let's see. What? Hey, this is what the IRS is here. What's up? Hey, I pay all my taxes. What? Yeah. Hey, this is a brokerage right here. If you want to get it, it's in the link tree in my bio. It's the very first link there. It's called Momo. Let's see. Um, SQM. What's this one right here? SQM stocks. So, I don't know. This one looks so risky. They're a $10 billion company. The stock hasn't done too good. It hasn't. It's flat since 2021. But let's see what they do. So they do lithium. So yeah, unfortunately, the price of lithium, the commodity, has collapsed, which I think is why the stock has not done too good. It probably just follows lithium. But this is one of the better lithium stocks, if not the best one. Yeah, look at that. They lost net income. So actually, yeah, that was a one-time adjustment. So yeah, the profits have collapsed. It's down 33% year over year, but they're still making net income every quarter, like 200, 300 million. So I want to see the growth come back to that one though. Yeah, they're efficient managing costs, good dividend stock. Yeah, they had a nice yield and growth rate. Oh, so here's one, TPL. So this is Texas Pacific Land. They get so much in royalties, man. This is a huge royalty stock right here, but if we look at the net income right here, yeah, they just make like 100 million plus of net income a quarter, and they're in the S&P 500, I believe, which was one of the reasons why the stock like rallied. So I think it was this day right here. There was no news, but they got added into the S&P 500. I don't know, but the stock's done incredible. So congrats if you own them. They even pay special dividends sometimes, which is pretty cool. So yeah. Let's see. We get Tesla earnings in 2 hours. Hey, we're seeing a slight bit recovery in the market. We're up 1.96% on the day. Yeah, here's my total percent change. So let's see. Here's us on the 1 day performance. So yeah, the only stock down on the day is United Health Group. I actually bought United Health Group yesterday for the first time. So check this out. We're actually down 1.45, but I bought United Health Group yesterday. So I wanted to share that. Oh yeah, here's my Roth IRA as well. A Roth IRA is just a tax-free retirement account. Here are the two stocks we got in here. Yo, Kroger hit an all-time high today. There's so much volatility in the market right now, but Kroger literally hit an all-time record high today, which I found very impressive. Again, I wish I bought more of them. I only own 5 shares, but InnoData is up 5%, but we're down 6% on them. They're like a growth company. Actually, should we do some analysis on InnoData? They're a really cool company, I think. I'll be really quick about this. Here's why I decided to buy them in my Roth IRA. I'm probably just going to hold this stock for many years. Again, not financial advice. Don't listen to me. I'm not an expert. I don't sell anything. I don't have a course, book, Discord, none of that. Anyway, this is why I bought them. Look at the growth here. I mean, you can't make this up. It's so impressive. It's up 161% year over year, literally to a new record. Their agility revenue, that's up 25% year over year. And they have no net debt. Literally no net debt. They are now making a ton of net income. They're profitable now. The sales growth is incredible. Assets are growing. So that's a fundamentals play, in my opinion. Insane growth company. Uh, Yo, what up? Ali said, thoughts on Rocket Lab. So, yeah, this is the company that sends rockets into space. And this company has a backlog of $1.3 billion of orders that they haven't fulfilled yet. Here's why I like just looking at the numbers right here. It's so impressive. This is why the stock has done so good. I mean, not in the past couple months here, but look at the space systems revenue. It's so impressive. It's up 75% year over year, literally to a new record. So, I mean, incredible growth on the space systems business, but you still got to be careful because if you go to the bottom line, they're losing like 50 million a quarter, but that's not that bad. Um, Only 50 million a quarter. They'll kind of grow out of that. It's kind of the hope here. Uh, let's see. Oh, you want to? Hey, yeah, this is if you want to get this platform, go to the link tree in my bio. It's the very first link there, Fazo. Um, oh, what a Bogdan said. Oh, in stock. So on Semiconductor, I haven't heard of this stock in a long time. So they're a $14 billion company and they're trading at a very low valuation, 9 times net income. So that seems fair. Power Solutions, how's that doing? So it looks like they lost their growth. It's down 16%. That's really not good. Their analog, oh, that's down 18%. So yeah, so it looks like they really just lost their growth on all segments of their business are down. So yeah, revenue's down 14, net income's down 32, so they just lost their margins. Yikes. Margins fell 20%. So I can understand why the stock price has fallen so much. Um, ah, where does their revenue come from? Yeah. Oh, so look at that. Only 18% of their revenue came from the US. They have a lot of, like, I guess, China exposure, international exposure. I'd be careful with that one. Nothing's really blowing me away there. They unfortunately lost their margins. Yeah, Liam said CEG starting back to 3 Mile Island. You're right, dude. They're, I know all about that. I love CEG stock. This is the largest nuclear energy stock. They own 55% of all the U.S. nuclear energy facilities. I cannot see your link tree in bio. Hey, I think if you reset the app, I think if you follow me, it hides my link tree in bio. I think if you reset your app and come back, it'll should show my bio. I hopefully my link tree's in the bio. Maybe it's just not there. I don't know. Yo, what up, Chucks? Thanks for the rose. Yo, Chucks, thanks so much for the rose, dude. Yeah, you got a stock you want me to look at? Let me know. Oh yeah, he said, I got you, dude. Thanks again for that. He said XXTC. So I'll just be honest with you, man. Whoa, they're up 163% on the day. So there must have been some good news. But here's why I'd really, really, really stay away from this one. The whole company is worth $1.3 million. So think about that. The whole entire company is worth 1.3 million, and yeah, the sales are 800,000, and they lose. Oh yeah, I just couldn't trust my money with that company. They could be a fun, maybe short term swing trade, but I could not trust. I would definitely would not hold that one. Actually, not financial advice. Just don't even mess with that stock right there. Um, it looks so risky. But congrats if you own them. If you bought them before the 100% rally. Yo, whoa, Ahmed said, Eli Lilly, yo, this company, they just made a weight loss pill. The Ozempic, you have to take a shot, but Eli Lilly, they made a pill version, and that's why the stock really rallied right here. Here's what's so impressive about Eli Lilly. I'll be really quick about this. They sell a bunch of different prescriptions right here. Like, look at Mounjaro, for example. So impressive. I mean, this growth is like so impressive. It's literally up 60% year over year. What about look at Zepbound? This is their weight loss prescription. Look at this. A year ago it was 175 million. Now it's 1.9 billion just in the most recent quarter. I mean, that's so impressive about Eli Lilly. So yeah. Oh yeah, what up? We can look at SYM as well. So sorry if I don't get to all the stocks here. I'm trying to uh get to all of them. I appreciate y'all being here. If you want to hit the follow button, we go live every day, twice a day. So here's Symbiotic. This is a robotics company. A lot of they have a huge partnership with Walmart. And look at the sales. This is why I really like this company. The sales are up 33% year over year. So that's some really nice growth. Sales are up 33%. But here's where you got to be a little careful. They are still a money losing company. Like they're losing a lot of money right now. But the trend is getting better, which is the good news. Like they even made net income last quarter. So they are a bit leveraged. But yeah, I do like them. That's probably my favorite robotic stock, to be honest with you. Like I'd stay away from Rich Tech Robotics. I'd way rather buy SYM. So let's see. You invest in rare earth minerals, or I don't. No, I like gold. IAU is the literal commodity of gold. Look at gold right now, dude. Congrats if you own any gold jewelry, chains, whatever. The stock is at, or the actual commodity of gold is at an all-time high right now. I mean, look at this rally. Whenever there's war fears and whatever, gold just does good. So, can you check MELI? What up? Let's check out. Oh, this is the are they like a insurance or finance company? I don't remember. We'll actually I'll go find out. So they're $100 billion company. So impressive. Oh, so they're in commerce services. Yeah, financial service, credit revenue. So yeah, let's check out. Wait, where does the revenue come from? So oh, look at that. That's not in the U.S. So all the revenue comes from like South America, like Mexico, Brazil, and Argentina. Okay, so let's see the bottom line here. That's not bad. This is a international exposure one, but wow, look at that. They made a lot of net income in the most recent quarter. They don't pay a dividend, but the stock is at an all-time high. So congrats if you own them. They're doing great. So check XPing, yo, XPEG. What's the ticker symbol for that one? XPENG? Or oh, here it is, XPEV. So yeah, this company makes the flying cars, I'd way rather buy a BYD stock than this one right here. Um let's see. Their vehicle deliveries are all right, well, let's just go to the bottom line here. So yeah, look at that. This is in Chinese revenue. So yeah, first off, it's a Chinese company, but yeah, look at that. They're losing like 100, 200 million of net income a quarter. Sales are up 20%, which is good. Yeah, I want to see them. They're not losing that much money, but yeah, Porsche, hey, I didn't know that. Porsche owns 5% of the company and Alibaba owns 4% of the company. I didn't know that. Hey, I that's kind of interesting. Is coal worth investing into? I think it's like AMR. Yeah, this is the huge coal stock right here. So this is the I don't like coal. I'd rather buy like nuclear energy like a CEG, but here's a coal stock right here. I think. And here's the thing, this company used to print net income and now unfortunately I don't know what happened. It just went negative. So kind of lost the growth there. I don't know. Let's see. Is Fastenal good? What is Fastenal? Give me yeah, give me the ticker symbol. I'm not sure what that is. Still holding Hertz from 490. Yeah, dude. Honestly, congrats on your Hertz huge W right there. But here's a company that I would consider, again, not financial advice. I'd maybe sell out of this company. Here's the thing. I actually made a video about this. The whole company right now is worth $2.7 billion. So remember that. The whole company's worth 2.7 billion, but if we go to the net income right here, they've lost like 2.5 billion of net income just in the past year. Like just last quarter they lost 1.3 billion dollars. That's half the business they lost in one quarter. So the only reason the stock went up is because Bill Ackman took a stake into Hertz. So in my opinion, I'd maybe take a little bit of profits on that one. So let's see here. Um, how is BlackRock so rich? Yeah, so this is a really great stock. I would happily own this one. This is like a dividend growth company. And here's the thing. Look, you get a 2.3% dividend yield and only a 50% payout ratio. They have so much room to raise the dividend. Like, here's why BlackRock is so rich. They collect like fees off their assets, like their equity business. Look at that. That's up 21% year over year. That's their main business. What about the fixed income? Fixed income revenues up 10%. Alternatives. Whoa, look at that huge jump. It just went up 63%. So, anyway, incredible growth on BlackRock. Yeah, let's see. The sales were up 11%. And net income, they had a little one time adjustment to their net income. But anyway, yeah, I like them. They don't have to pay tariffs on cars they already own. And oh, yeah, that's right, Mark. That's actually a good point. I didn't think about that. They could like resell the cars that they're. I know they have a huge Tesla fleet. They kind of got screwed on. But MSTY, yeah, Omar, I'd stay. This is a covered call ETF. So MSTY, you buy this company to maximize your dividend income. All they do is sell calls on MicroStrategy, and you're just not going to outperform the market in the long run. What you do get with this is a huge high dividend. So they have a really high dividend. So that's what's cool about them. So yeah, oh yeah, here's our main portfolio, by the way. We're up 2% on the day. We're seeing a slight little recovery. Hey, that's great news, actually. Uh, well, we're trending down, but now we're kind of trending back up. That's good news. And we get Tesla earnings in 1 hour and 30 minutes. So that'll be very interesting. Tesla's either going to go up or down a bunch. Are you keeping these for the long run or trading? Yeah. So again, not financial advice here, but mainly my strategy is I just like to buy and hold high quality companies for the long run. Like all these stocks, well, most of these, I've been owning these for over a year, like well over a year. I've held McDonald's, Carlisle, Google, Meta. I've held all these stocks for well over a year, and I don't see a reason to sell them. Oh yeah, we also have a Roth IRA right here. We got some Kroger, Data, but yeah. Yeah, let's see. MANH, what's this one? Yeah, I don't know what rain metal is, man. If you got a ticker symbol, give me the ticker symbol of the stock and I can check it out. I don't know what that is. I'm assuming that's the name of the company, but this is a $9.7 billion company. The stock unfortunately just tanked on earnings. Let's see. On all three metrics they met expectations. I don't know why the stock fell so much. Let's see. So revenue was up 7, net income was down 1.4. So they lost a little bit of their margin. I don't know. They don't pay a dividend. I have to do some more research on this company. I'm not sure what they do. Um, hmm. Let's see. So they do software. So they're a software company. Interesting. HAL. Let's check this one out right here. Halberton. So yikes, the stock has done nothing since 2005. If you bought the stock in 2005, you're down on your money, unfortunately. So this is an oil and gas company. So, yeah, you should get a really nice dividend. Look at that. You get a 3.3% dividend yield, and the payout ratio is only at 25%. So, they got room to raise that dividend. But, yeah, look at that. They're making like 700 million of net income a quarter. Nice. I have 84 grand just in Hertz, yo, dude. I wish you best of luck. That company looks really risky to keep that much money in, but that's what's up, Mark. Um, so hopefully that's not a huge chunk of your portfolio. Again, you've done great on the position, and I'm so glad. So anyway, this is a $46 billion company. This is ticker symbol FAST. Let's check it out. So they sell. Well, look at that. They sell fasteners, safety supplies, janitorial supplies. How's that doing? It's up 10% year over year. That's kind of interesting. Do they have a dividend? Yeah, look at that. You get a 2% dividend. The payout ratio is a little high. Let's see. Is the business growing? So sales are only up 3%. So yeah, that's not good growth. Sales are up 3. But yeah, they're making like 2 to 300 million of net income every quarter. So and they have a really good balance sheet as well. The dividend payout ratio seems a little high, but I want to see the growth come back. I started a Roth IRA. Why do you not have more in your? Yeah, Josh, I know. I need to start investing more in there. Um, let's see. Oh, RHM. Let's see. Is it RHM stock? What's up, Anup? RHM. Uh, can't find that one. I'm typing it in here. Unfortunately, I can't find that stock. I ran it back in 2020. I'm familiar with the stock. Now, okay, that's what's up. Um, SPH stock. What's this one? Suburban Propane. Hey, this one's done great. They're at an all-time high pretty much right now. And what about the dividend? Hey, on top of them being at an all-time high, you have a 6.4% dividend yield. So that, yeah, they do propane. So yeah, they just sell a commodity, but hey, that's real nice. What program is this? Yeah, if you want to get this program, Andrew, it's called Mumu. It's in the link tree in my bio. It's the very first link there. Yeah, here's what's cool. You can track like super investors' portfolios, like a lot of quantum stock. I like Google and IBM as the main quantum stocks. Microsoft is kind of a quantum play, but yeah, Warren Buffett, he has a lot of the higher yielding stocks like Coca-Cola, Bank of America, Chevron. Yeah, a lot of my favorite oil stocks is like Chevron, for example. If you just buy Chevron, which stock has also done pretty good, you get a 4.7% qualified dividend. So you basically get a 5% return of your money every year just in the form of a dividend from Chevron, not even including the stock price appreciation. You won't outperform the market with a Chevron, but you get exposure to oil and a nice qualified dividend. Hey, what up, Not Fates? What's up, dude? He said, "Can you check out pizza?" Yeah, dude. If you go to my most recent TikTok, I was like, Papa John's is going bankrupt, unfortunately. Have y'all heard of Papa John's Pizza before? Here's the sad news. So look at their main business right here. Com- Company-owned restaurants are down 15% year over year. So they lost their growth. Company-owned restaurants are down 15%. Their high-margin franchise and royalty fees are down 10% year over year as well. So that means they're losing or they're closing down some stores, which is unfortunate. So yeah, I'd be careful. They have a 6% dividend yield, but 72% payout ratio. I would just the risk reward might be decent, but I'm just staying away from that one. Dude, there was some huge news. McDonald's had a huge boost of April sales from the McDonald's Minecraft meal. You think Nvidia's going down more? What up, White Tea? Let's check out Nvidia right here. So yeah, they're under $100. The forward PE is like a 23. So the forward PE is really fair on this one, but they are impacted from tariffs. Like here's their PC GPU market share. They actually have an 18% GPU market share. We can see the automotive business; it's also at a record because they partner with like GM and WeRide. And the best part's the bottom line here. They made 22 billion of net income just in the most recent quarter. So that's honestly the best part about Nvidia. Nvidia is so big, they literally own some individual companies or they own part of it. Like if we go to Nvidia's portfolio right here, dang, it's down 30% the past 250 days. You know what? That's probably because of WeRide right here. Remember Nvidia's vehicle business? Like they partnered with WeRide for this, and unfortunately, this is like a huge pump and dump. Nvidia took a stake into WeRide, stock goes to $40, and now it's all the way down to $9, unfortunately. So, yeah, and they own part of ARM as well. I really like ARM Holdings. They make like the energy efficient stuff. So, ooh, NVO, yo. So this is Novo Nordisk. This is the company that sells Ozempic. If anyone's heard of Ozempic before, it's like a weight loss prescription. Unfortunately, the stock of this company has collapsed, and that's because the patent for Ozempic expires in 2027, which is really unfortunate. But for right now, the business is doing great. They're literally making 3 to 4 billion of net income every quarter. It's incredible. And you get a 2.3% dividend, but they're kind of being taken over by Eli Lilly right now. I think tariffs are going to impact it. I'm not too sure. So, yeah. Oh, someone said realty income. So this is the monthly paying dividend stock. Actually, it doesn't show the dividend on there. This one literally pays you, look at that, every single month. They pay you 26 cents every month. They're in the S&P 500 as well. They're worth $52 billion. The thing is, though, you're not going to outperform the market owning this stock. Like, look, the stock is actually down since 2019. This was the huge pandemic dip right here. The stock is down from 2019, but what you do get is a 5.5% monthly paying dividend with realty income. So yeah, that's what a lot of people like about them. And they do triple net leases. AMZA is an MLP. Yo, check out ticker symbol AMLP right here. This is I'll be quick about this. This is an ETF that owns a bunch of MLPs. And you don't get a K1 tax form. Like if you want to go buy like EPD right here and like ET, I was asked about ET earlier. Don't buy these stocks because they give you a K1 tax form. They're notoriously hard to fill out. I accidentally bought one and it costed me $400 with an accountant. So I stay away from the MLPs unless you have like a lot of money in those. But let's check out AMZA. This is another this is another ETF right here. So that's funny. So here's another one. So yeah, their top holdings are uh American Pipeline, Sunco. So yeah, you know what? I'll add them to the watch list as well. I wonder what their expense ratio is. But yeah, it has a really nice dividend. 8.4% dividend yield. Nice. Data Center DLR. Oh yeah, that's Digital Realty Trust. They actually have a partnership with Realty Income, the stock we just looked at. So yeah, this is another triple net lease. They own the land under a bunch of data centers, and they're a real estate investment trust, a REIT. They actually have a 3.3% dividend, and they have to pay out most of their income in the form of a dividend by law because they're a REIT. They're specially taxed. They add back the depreciation and the amortization. Ooh, Royal Caribbean, yo. This is so surprising. So this is the cruise right here. You've maybe heard of Royal Caribbean, the cruise line. What's so weird is this company has incredible fundamentals. I mean, they're making so much net income every single quarter. Like it's really impressive in my opinion. And you get a 0.5% yield and the payout ratio is only a 9%. They have so much room to raise their dividend. They're doing major stock buybacks. So this is the most impressive cruise I've ever seen. Uh, Hey, what up? Hey, appreciate you, Jonathan's. Appreciate you, man. Yeah, hey, by the way, I appreciate y'all being here. If you want to hit the follow button, we go live every day, twice a day. And I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I don't got none of that. I'm just on here giving my opinion. Oh, here, and I'm reading both the TikTok and YouTube chat. Hey, yeah, if y'all do want to support me, the only thing I do have is a YouTube channel. If you missed anything, you can replay it on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But anyway, here's HLIO. Yo, I'll give you my honest opinion on this stock right here. This one looks real risky. The whole company's worth $800 million. And yeah, the stock is at the 2016 low. So let's see, what do they sell? So hydraulics. So it's the revenue is down 10% year over year. Electronics revenue is flat, so they're not really growing their business anymore. So yeah, the net income is positive though. That's the good sign that they're actually making net income every quarter. But they kind of just lost the growth. I'd be careful with that one. It's not terrible to be honest with you. It's really not terrible because they're making net income. Do you think Neo can go? Yo, I think I would stay away from Neo. It might move with Tesla earnings. We get Tesla earnings in 2 hours or 1 hour and 30 minutes, and it's going to really move Neo stock probably. But here's why I just stay away from Neo. Tesla makes net income every quarter. Yo, Jada, thanks for the rose. I really appreciate that. Tesla makes net income every quarter. Well, Neo literally just lost $1 billion just in the most recent quarter. So they lost $1 billion just in the past 3 months and the whole company's worth 8.4 billion. So they lost 15% of the market cap in one quarter. They I don't even know if the Saudis can save them. So hey, what up, Poe? OSCR stocks. Yeah, this is the Oscar Health. Here's what's so impressive. There's some good news and bad news about this company. Yeah, Jada, we'll check out INVH as well. Thanks for the rose. Here, look at Oscar Health's revenue growth. This is what's crazy. A year ago, or no, in 2019, the revenue was 550 million. But now for the full year 2024, it was 9.2 billion. I mean, that's ridiculous growth. That's what I really like about this company. But they're not making consistent net income. They actually lost 150 million of net income. That's why I think the stock has kind of been slacking recently. But I love the sales growth. Honestly, they'll kind of grow out of those net income losses in a perfect world. But yeah, let's check out INVH stock right here. So Innovation Homes. So the stock has done pretty decent since 2019, and they have a 3.3% dividend yield. I think this is a real estate investment trust. So let's see. Yeah, look at that. They're making like 100 million of net income a quarter if you average it out there. Cash from operations up 51. So hey, it hasn't done too good. Like I don't know if you'll outperform the S&P 500 owning that stock, but they've done pretty decent. You get the nice yield. Um, Gas is too cheap. Nobody wants electric golf carts. Yeah. Wait, golf carts. Golf cart stock? Which one's that? Um, Check out Great Land Gold, GGP. What up, Bav? He said, wait, GGP. I can't find that one. Sorry there. Maybe is it GGO? I don't know. Oh, someone said EPD. So yeah, this is the company that gives you the K1 tax form. I accidentally bought a company that was like this. They send you a K1 tax form. It costed me $400 with an accountant to get it filled out. So I instantly sell all my MLPs for the complicated tax. But if you do buy this company though, because they're an MLP, you get a really nice sustainable 7% dividend. So because they're specially taxed, they have a sustainable 7% dividend yield. But I just avoid it for the tax complications. So let's see. Hey man, hey, I appreciate you, Andrew 3G. I appreciate you, man. Thoughts on Apple? Yeah, EM90. Let's check out Apple stock. So yeah, this is the largest company in the world. It's Warren Buffett's largest holding. It's Nancy Pelosi's largest holding. And here's the most impressive part. They have a huge smartphone market share. 23% smartphone market share. Their most sold product is the iPhone. It's 55% of the revenue. Then the services business. And a lot of people are locked in the Apple ecosystem. Whenever you buy something in the App Store, Apple takes a 30% transaction fee on that just because they're Apple. Here's why they're so affected by tariffs as well. Only 36% of Apple's revenue comes from the United States. Did you know that? And 25 EU. So but it's also kind of good that they're internationally diverse. So yeah, they made 36 billion in the most recent quarter. Yeah, if we go to like Warren Buffett's portfolio right here, or no, Nancy Pelosi right here. Nancy Pelosi's largest holding is Apple. 20, that it's like that for a reason. If we go to Warren Buffett's portfolio, 22% of his portfolio is in Apple for a reason. So yeah, in my opinion, that's a great one to just buy and hold forever. Don't trade Apple. Just buy and hold them for the long run, I think. Again, not financial advice. Yo, Jeffrey said ZBRA. You know what's crazy? I was just in a grocery store the other day. I was in a grocery store, and the little scanner machine where you at the self checkout, it said Zebra Technologies. So this company sells, I guess, scanner. It was so interesting. They sell like scanners for like grocery stores. That's one part of their business. They have a software. But anyway, look, they're making like 100 million plus in net income a quarter. So their net income is starting to revive back, which is good news. Yeah, their sales are growing, which is good news. But the stock price has been heavily suppressed. What app is this? Hey, this is a brokerage right here. If you want to get this app, it's in the link tree in my bio. It's the very first link there. Oh, yo, what up, Sunny D? Yo, that sounds great right now. I haven't had that in a long time. Some Sunny D orange juice. But here's SoFi Technologies, dude. This company right here is super impressive with they're a fintech. Look at their financial services business. This is the best part about the company. It's literally up 85% year over year to a new record. So incredible financial services growth on SoFi. What about the lending? So the lending revenue is up 18% year over year. So also at a new record. And this company is now making a lot of profits. No one took SoFi serious a while back. They used to lose, 100 million of net income a quarter. Well, check this out. Now they're making net income every quarter. They've really turned things around. So that's what's cool about SoFi. Uh, yeah, no problem, EM. MRK stocks. So yeah, this is Merck. This is a huge like COVID beneficiary. Remember the Merck red pill and stuff. But let's check out the business. How are they doing now? So the sales are up 6% year over year. And look at that. Wow. That's a lot of net income every quarter. I will give it to them. They're making like 3 to 4 billion of net income every quarter, even still. So actually, that's really impressive. Do they pay a dividend? Yeah, you get a 4% qualified dividend 50% payout ratio. Actually, That's not too bad. And they're trading at a low valuation just because of the slow growth. But actually, Merck's not bad. I do like them. LMND. So this is Lemonade right here. So Lemonade is a insurance company, and unfortunately, they have really high growth. I mean, if we look at the sales right here, or actually, it'll look better down here. This is the bad part. They're losing net income every quarter. They're still not making any net income, and they've been losing money for years. They just haven't gotten profitable, but they're getting closer to profitability. But look at this growth. This is really impressive. The sales are up 28% year over year. So sales are at a new record. So their premiums, so their total premiums earned are growing. Hey, I own a different insurance stock. Hmm. Oh yeah, here's our main portfolio on the day. A new insurance stock I bought today. Of course, it's down. Every stock is up on the day except for my United Health Group. But yeah, UNH is a new stock I bought. Again, not financial advice, but I'm down 1.22% on them. I bought them yesterday. I think the risk to reward just looks pretty good on UNH. So yeah. Oh yo, Fetty. Um. Oh, hold on. Give me 1 second. What the? TikTok making me fill out a captcha. Okay. All right, we're back here. So anyway, let's look at Affirm Holdings right here. This is the buy now pay later. Um this is the buy now pay later company. If you've heard of Affirm before, I think you can like buy now pay later stuff on Amazon with Affirm. But anyway, this company has some impressive sales growth. The sales are up 46% year over year. That's incredible growth. Unfortunately, if we go into a real recession, people just won't pay back these loans. But if we look at the net income right here, I mean, they just made net income for the first time. That's what's so impressive. You know, if we zoom out, they were losing over 100 million of net income a quarter. But now, for the first time, they finally made 80 million of net income. And that was real net income. Sales were up 50%. So that's great news. Cash from operations, wow, 312 million. So that's really impressive. So yeah. Oh, they partner with wait, did a firm partner with DoorDash or was that Klarna? I don't remember. I think Klarna, are they public yet? Klarna? Or oh, they haven't IPO'd yet. So Klarna's about to IPO. I don't know. They're like another, I think, buy now, pay later stock. But anyway, yeah, hey, if y'all want to hit the follow button, we go live every day, twice a day. We're going to be live later today for Tesla earnings. I really appreciate y'all being here. Again, I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. But if you do want to support me, the best way to support me is just go subscribe to my YouTube channel. If you missed anything, you can replay it on the live stream. My YouTube channel is called Nathan Robert. My YouTube channel is also in the link tree in my bio if you want to check it out. I really appreciate y'all being here. Yo, Yazzo. Yo, I was about to end the stream, but if you got a stock you want to look at, let me know, Yazzo. I'll give you the last stock to analyze. But yeah, I really appreciate y'all being here. On quick, another thing, TikTok has banned this account I'm on, Nathan Robert, right now on TikTok is my only TikTok account. It has been permanently banned over 8 times to where like I can't even log into it. So I'm so scared that, and it's been unbanned 8 times. So I'm scared that it's just gonna get permanently banned one day. And so that's why I'm trying to like just get people to subscribe to my YouTube channel. I also just made a whole video. If you're curious about my most recent purchase, if you're wondering, I get straight to the point in the video. I do a whole analysis on United Health Group. I'll show you why I think this one's at a very fair valuation. You know what? You know what? I'll do a super quick analysis on United Health Group for you that I normally wouldn't do. So check this out. So for these insurance companies, you really want to look at the total premiums earned. It's on the left here. The total premiums earned was 108 billion, up 10% year over year, literally a record total premiums earned. So they have such a sustainable dividend payout ratio. Look, so they made $9.1 billion in the most recent quarter. They made 9.1 billion. The dividend only cost 1.9 billion. They have a 45% payout ratio. And they do crazy stock buybacks. They spent 3 billion just in the most recent quarter buying back their own stock. Anyway, you'll kind of learn more about that in the YouTube video I just uploaded. If you want to check it out, YouTube channel is called Nathan Robert. Link tree in bio. And yeah, hey, what up, sweet? Yeah, can we meet? Yo, not for, I would not mirror what I'm doing, but my favorite stocks to buy right now is Amazon, Google, Meta. Again, I'm not an expert. This isn't financial advice. Like you could lose a lot of money on a stock. Like look at this one right here. So always have a diversified portfolio. Uh, but anyway, we'll be live later today for Tesla earnings in 1 hour. Wait, 1 hour and 20 minutes. I think we'll be live for Tesla earnings. We'll do a quick stream there to check it out. But anyway, see you all later. We go live every day, twice a day. Sometimes even 3 times. See you guys later. Thank you all for being here. Y'all are the best. And yeah, thank you for y'all on the YouTube live stream as well. I really appreciate y'all being here. Um, I'll see you all. Go. Let